But the lesson I can give you is a few is all you need, and don't be disappointed.
Are you someone who is not able to capitalize a lot of money to invest in the stock market? Then don't worry. The vice chairman of Berkshire Hathaway has some practical tips when it comes to investing. His extensive background in banking and investing makes him a force to be reckoned with. Let's see how it is done, according to Munger. Young investors trying to establish a name for themselves in the financial world can take some guidance from Munger. He is cautioning the most recent crop of college graduates that it may be harder than ever to become wealthy and maintain that status. According to Munger, young people who want to become and remain wealthy face two major obstacles: inflation, exploding real estate costs, and the increasingly complex nature of investment. Charlie Munger lists 3 ways to make 50% annual returns with modest investments. Munger advises searching for investment possibilities in inefficient marketplaces. 2 markets are inefficient: those that are small and of little benefit to Berkshire with its $120 billion, and those where crazy people act wild, especially if they are selling. There are occasionally some ridiculously mispriced securities in the major markets. There's no denying, however, that there are many opportunities to discover mispricings in small markets. One should try to identify the insufficient market where you can find a fortune. Buffett and Munger can't gain much from investing in traditional hidden jewels because Berkshire is now so large. Instead, they must concentrate more on locating top-notch businesses and letting their investments grow over time. Yet they continue to be idolized by value investors everywhere for their ability to spot what Warren Buffett would term a wonderful business at a fair price. More voices are preaching quick money in today's media scene. Numerous risky yet admirable success tales built around a house of lucky cards exist. Buffett claims that one reason in the problem is that it is easier for people to get the cash needed to implement a doubtful business plan or promote a notion. When these companies go public, their financial situation or path to profitability may be, at best, unclear. To determine whether a potential growth stock can close the gap between expectations and reality, investors will struggle to cut through the clutter. According to Buffett, opportunities aren't taken away by new things that come along. Other people's stupid actions are what create possibilities for you. And in the 58 years we've been operating Berkshire, I'd say there's been a significant rise in the number of individuals making large mistakes. They do it in part because it's so much simpler now than it was back then to collect money from other people. That's why we need to patiently wait for big swings and hit the ball when it's the right time. This can be illustrated by the most successful baseball player, Ted Williams' book, The Science of Hitting. It includes an effective representation of him taking a swing with 77 different squares making up the striking zone. Williams realized that waiting for a pitch to land in his sweet spot greatly improved his odds of getting hit. A 40% success rate was available by being patient and waiting for the ideal occasion. On the other side, impatience can reduce his success rate to just 23 to 25%. Williams recognized that even the best hitters might become ordinary if they swung at the incorrect pitch, and that mediocre hitters could become great hitters if they waited for the appropriate pitch. Munger says that this is also needed when it comes to investment. You have to patiently wait for the right opportunity and refrain from doing dumb things in a hurry. Value investors can be tempted to allocate their wealth using an ever-increasing amount of data. A more intricate investing plan, however, does not always guarantee greater outcomes. Higher returns might result from a more straightforward strategy that concentrates on important investment tenets like evaluating company fundamentals and business valuation. It can also give you more time to look for lucrative investment options that consistently surpass the stock market by a small percentage. Munger once remarked, "You don't have to be brilliant, only a little bit wiser than the other guys on average for a long time. Determine your area of expertise and wherever you can, use your knowledge to avoid situations you don't fully comprehend. There are no points for overcoming obstacles in life or work. Seeking genius is harder than avoiding stupidity." Another one of Munger's quotes has a connection to this one. People are attempting to be intelligent. All we should attempt to do is avoid being stupid. But it's more difficult than most people realize. To suggest diversity while investing in common stocks, in Munger's opinion, is insane. One of the absurd things taught in contemporary university education, according to him, is that investing in common stocks requires extensive diversification. That is a crazy notion. It's difficult to have an endless supply of excellent possibilities that are simple to spot. And if you only have 3, I'd prefer to be in one of my greatest rather than worst ideas. In just 3 stocks, Munger and his whole family business primarily invest. Additionally, Munger advises investors to be aware of their capabilities. We're not so smart, but we kind of know where the edge of our smartness is. That is a very important part of practical intelligence. If you know the edge of your ability pretty well, you should ignore most of the notions of our experts about what I call diversification of portfolios. Nothing is a priority when everything is a priority. Maximizing competing factors will only lead to failure. It differs from the norm to choose one variable and narrowly concentrate on it. This is an effective technique. Competing with companies that have accurately determined which variables to optimize or decrease is challenging. You'll boost your chances of being swift and nimble and being able to react to changes in the terrain if you concentrate on one factor. It has never been harder for young people to make and keep their money, according to billionaire investment manager Charlie Munger, who has been in the business for a long time. At the annual meeting of the publishing company Daily Journal Corporation in February, Munger stated that it has become much more difficult to successfully navigate the investment world in recent years. Even after accounting for inflation, he added, many areas of the United States now have considerably greater living expenses than ever before. The group of people who have recently graduated from college will find it far more difficult to become and remain wealthy, according to Munger, 98. Consider how much it used to cost to own a home in a posh area of a city like Los Angeles. According to a recent filing, Munger resigned from his position as chairman of the Daily Journal on Monday. He continues to serve as a director for the business and has long served as vice chairman of Berkshire Hathaway, Warren Buffett's investment and holding company. The foundation of Charlie Munger's investment strategy is the idea that good chances are scarce and infrequent. He famously observed, "Life is not just bathing you with unlimited opportunities." Therefore, finding as many good ideas as possible is not the goal of Munger's process. On the contrary, he looks to get rid of bad and average ideas first. This can seem like a counterintuitive strategy, yet he frequently discusses the benefits of thinking in reverse. It is evident from Munger's statement that he prefers to look backwards. It's remarkable how much longer-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent. Munger firmly seizes opportunities when he finally recognizes them because he feels that good opportunities are uncommon. And that's it. So, are you planning to reconsider your investing strategy after watching this video? If so, let us know in the comments below. For more videos, subscribe to this channel. Also hit that notification button so that you won't miss any future content from us. See ya!